Welcome back, tech enthusiasts. Today, we're diving deep into the world of HP Incorporation, where numbers tell the thrilling tale of a company's journey through the ups and downs of the market roller coaster. Buckle up, because this is going to be a wild ride. Picture this. HP Inc.'s price-to-earnings ratio or PE ratio over the trailing 12 months is 8.60, but hold on to your seats because the forward PR drops to 7.97. Talk about a bargain bin find in the stock market aisles. Both indicators suggest a potential undervaluation when we compare it with their 5-year average PR, which stands at 8.81. HP Inc.'s price-to-earnings-to-growth ratio is here to play, standing at 2.87. That's like having a turbo boost broken for growth potential, suggesting a potentially overvalued stock after introducing growth forecasts in the metric. Ever wondered who's pulling the strings behind the scenes? With insider ownership at 0.22%, it's clear that HP Incorporation is a company driven by the visionaries within its ranks. Despite not having the return of equity metric available due to his negative equity over the last years, the other profitability metrics are so good. With a return on assets of 9.52% and a jaw-dropping return on invested capital of 43.54%, HP Incorporation is blasting off into profitability like never before. At $3.42 per share, HP Inc.'s earnings per share or EPS paints a picture of resilience. And with a projected 5-year growth rate of 3%, the future looks no brighter than ever. But if we see its evolution over the last decade, where there was a huge drop in 2016 and since then until last year very positive evolution, but in general had a compound annual growth rate of 15% over the past decade. After weathering storms in 2015, HP Incorporation bounced back stronger, showcasing a compound annual growth rate of 6.6% in free cash flow per share. Talk about turning setbacks into comebacks. With a hefty 3.76% dividend yield and a staggering 15.1% growth over the past decade, HP Incorporation is not just about growth, it's about rewarding its investors along the way. However, in the next years it is expected that its dividend will grow between 5% and 10%. But hold on to your hats, because we're about to hit a high-speed turn. With an operating margin of 8.29% and a profit margin of 6.46%, HP cannot afford any unforeseen event that reduces its margins if it wants to compete closely with their competitors. Over the past 8 years, HP Incorporation has been on a relentless climb, with positive revenue and earnings growth painting a picture of resilience and adaptability. This situation has been reflected in its market price, obtaining a very similar total return to VOO during the last 5 years. With a debt-to-EBITDA ratio below the magic number of 3 and enough free cash flow to pay off its debts in just 3 years, HP Incorporation is skating on solid financial ice. But what about the market cap, you ask? A whopping $27.80 billion, making HP Incorporation one of the top 5 companies in the computer hardware industry. Analysts foresee a bright future for HP Incorporation, with a projected price target of $31.73, representing a juicy 7.82% upside potential. And with a fair value estimate of $32.30, it seems like the market might be sleeping on this tech titan. So there you have it, folks. HP Incorporation isn't just a company, it's a saga of resilience, growth, and potential. Strap in, because the future of tech is looking brighter than ever with HP Incorporation leading the charge. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.